And our trader rundown, Matt Shapiro, president of MWS Capital, joins me now. You're a big-time portfolio manager, so it's perfect to have you on the show as we begin a new quarter.
Right. After really a tumultuous quarter that finally ended well, the market coming back over the last 5 weeks, far more than people expected. Oil rising 50% from its bottom. Emerging markets had about the best month they've had in many, many years. So a lot of investors are looking forward to a rally that might materialize, and we could actually test the highs that we set last year.
Is it important to watch what's going on with the small caps, those American small companies and mid-sized companies? Will they lead the way in the next rally?
Well, I think they really have to. Remember, small caps and the Russell 2000 especially is still mired in its bear market, and the Russell 2000 really needs to rise about 10% to confirm this rally across the entire market. We had the utilities doing better and the Dow Jones Transportation's average doing actually much better this year, but we really need these small caps to confirm this. So don't be surprised if the Russell 2000 and those smaller stocks could do very well into the summer.
Matt, beyond that, where are some places where you're putting in money for your clients?
Well, one of the things we did take advantage of during the correction was the big fall in the NASDAQ. So we added shares of Apple, Amazon, Google, actually making them some of our largest holdings, along with the typical stalwarts such as Disney, Starbucks, and General Electric. So those stocks actually have become, in a sense, value plays, especially Apple, which has fantastic earnings, a huge, very strong balance sheet with lots of cash. And I think Apple, for instance, is shifting from growth investing to value investing, so it really fit for us. And if you look at the technicals of the charts of Apple, Google, and Amazon, they look very strong, and they will be the leaders of the rally if we see one materializing for the rest of this month.
Now, you are bullish on this market, and you tend to be bullish. Has that been the right place to be for you?
Well, it really has, and you know, the right advice actually mattered. There were some brokerage houses that were very negative about this market during the correction, but they were just absolutely wrong. Global growth was good. Oil demand was actually not that weak, and China was going to do okay. For instance, there's lots of evidence that for instance, real estate prices in China are setting all-time highs. Spending is quite healthy. Finally, the required rate of return for investments is actually much higher than the returns that had been delivered. So it was inevitable that the market would come back and deliver the returns that investors were used to, even though they kind of gave up on it for a while.
We will never give up on you. Thanks for coming on the show, and have a great day, Matt.
Thank you.